The local banking sector is weighing in on the current tough economic times, saying that several factors are still hampering the demand for lower interest rates by the market.
They pay interest expense on that money. So that is factor number one. Factor number two are the operating expenses. Banks, wherever they are operating, these are not their buildings, they pay for electricity, they pay for occupancy, they pay for salaries, they pay for fuel on motorcycles to go and monitor loans, and so on and so forth. Not until all these things have been worked on that you would see a dramatic reduction in interest rates.
Fabian Kasi, who is the chairman of the Uganda Bankers Association, adds that a number of its members are equally still struggling to profitably manage the 15 trillion shilling credit market.
Of course, there is the other factor of bad loans. People who borrow and don't pay. You heard that by the time we ended last year, non-performing loans stood at 10.5%. By the time we ended last quarter, it has fortunately come down to about 6.5%. Still very high. Now, these are all things that banks take into account to determine the price at which they give you that money. There has been complaints that the central bank rate has been coming down, but banks haven't been lowering their rates as fast. First of all, banks have been lowering interest rates. The speed is now the issue.
The financial sector players are reasoning that expanding on the very narrow savings base within the economy could instead offer relief to millions of borrowers.
So, there isn't a savings culture here, guys. It's not there. So, if you were to ask me for my advice, government, another executive order. Government needs to have an executive order to basically force every single citizen of Uganda to save, but then give them a midterm access.
At the just concluded National Competitiveness Forum, the lenders also reiterated their demand for new products under the Financial Institutions Act be immediately effected so as to stimulate reduction in the cost of money.
The law on agency banking, but up to now we are still waiting for the regulations for agency banking. We don't have them, and now banks can't move. These are some of the things that are expected to enable banks to go out, increase scale of operation, be able to manage their costs, and eventually be able to reduce on interest rates.
Reina Ojon, NTV Business.